Folks, today I'm going to talk about not one, not two, but three tech opportunities, three pullback opportunities for March. Now, March is finally here, and what a shakeout February brought to the table, right? Now, the question many investors and traders are asking right now is whether this is a pullback or if there's more potential downside. Now, the market is trading at a fairly high earnings multiple, and bond market's been selling off. Based on my valuation, the US stock market is actually pricing into its value interest rates that are roughly 3 to 4% as far as the long-term valuations are concerned, especially when you compare that to historic correlation between bonds and US stocks and what type of yield is already priced into the US stock market. And that's why I believe the current pullback was merely a much-needed correction that only cooled off overbought price levels and brought stocks back to manageable valuation levels once again. Now, with the stimulus coming into the market, the level of liquidity we're seeing is unprecedented. And looking at the top gaining hedge funds, their portfolios remain focused on some of the largest growing tech stocks. And that's why, and that's what I want to bring to the table today. A few techs that look potentially good, like good potential opportunities to the upside, especially in light of the pullback that we've been seeing in recent weeks. Now, these stocks have strong institutional sponsorship and stand to trade higher as the market begins trading higher and moving towards breaking out all again at all-time highs or near all-time highs. The first stock is JD, JD.com, ticker symbol JD. And by the way, this stock is one of my top 13F filing buys. In other words, a lot of large hedge funds or fastest gaining hedge funds are buying and holding this stock right now. As China's second largest e-commerce company, JD.com is positioned to take full advantage of the Chinese online shopping needs. The stock has been showing solid growth and, as I mentioned, is a top 13F hedge fund holding over the past few quarters. There's a threat that the stock could potentially be delisted, but that would take at least a few years, which means investors have plenty of time to profit from this fast-growing company. The upside potential over the next 8 weeks is about $110 to $115 per share and possibly more over the next few quarters as global economy begins to pick up steam once again. Second stock, PayPal Holdings, ticker symbol PYPL. The company offers online payment solutions which allows customers to pay and get paid, withdraw funds to their bank accounts and hold balances in their PayPal account in various currencies. Payment volume through its network was up 31% year over year. It added 72.7 million new active accounts. In addition, PayPal added cryptocurrency capabilities to Venmo in November, which is huge. Growth in new users and the increased number of transactions they've used or using in PayPal and Venmo for the companies headed for 750 million active users accounts. And total payment volume is 2.9 or 2.8 something trillion, nearly tripled current levels by 2025. That's the expectation. Stock is up over 150% over the past 12 months, and I'm seeing a price target of about $315 over the next 8 weeks if the current momentum cycle continues as planned. Also, PayPal was also one of the top 13F holdings last quarter and one of the fastest gainers in the hedge fund world over the past few months. Last stock on my list, but one you're all very familiar with, and one I haven't talked about in quite some time. Sony Corporation, ticker symbol is SNE. Now, we all know what Sony does, right? Sony Corporation develops and manufactures consumer and industrial electronic equipment. The company's products include audio, video, televisions, displays, semiconductor electronic components, computer peripherals, communication equipment, telecommunication equipment. Now, Sony was struggling a decade ago, but it has turned its business around. The past 5 years has been a time for solid and consistent growth for the stock. It's up over 400% since early 2016. Now is a good time to get on board because it's all about PlayStation 5. The company sold 4.5 million units of the next generation game console last year, but it only went on sale in November, and supplies were constrained. Gaming is the engine that drives Sony's profits these days, and 2021 is going to be a year where the company will be able to sell every PS5 it can make. each of these console buyers will also be picking up accessories like extra controllers, PlayStation Network memberships, plus games, and more games, many of which are published by Sony. Stock is up over 72% over the past 12 months, and I believe we'll see a price reach about $120 level over the next 2 months if the current shift in momentum moves back into tech, which appears to be the case right now, and should increase with the $1.9 trillion coming into the hands of Americans who love to spend money on video games and gaming consoles, especially as we gear towards the summer months. And I hope that helps. Folks, in case you haven't noticed, small cap stocks are where it's at. That's because of how volatile the stock market is right now. Now, it has become clear that big name stocks aren't protected against massive falls, and that smaller stocks can prove to be more profitable in a fraction of the time. In fact, I signaled 118% on PFSI, 153% on DDD, and 414% on CNE in just a matter of 1 week. 1 week. These windfalls are what I like to call microbursts, and I'm finally revealing the details behind my brand new strategy to the public. All you've got to do is click the link to reveal my secret ahead of the next big market move and to learn which stocks I'm targeting next. To make sure to like my video and subscribe to this channel if you're watching on YouTube, and stay ahead of the market by being the first to be notified when we release new videos.